passive investing really isn't even that passive, but for the sake of our conversation, right, passive investing is essentially investing your money as someone that has capital, maybe a business owner, someone that just had a liquidity event, high income W-2 person, doctor, lawyer, chiropractor, dentist, you name it, and they're going to place capital with someone, with a deal, and then be hands off completely. That essentially would be passive investing. But it's not to be confused like it's just completely passive. You have due diligence to do on the front end, and that's what we're going to be going through today.
Yeah, and I would say an example of that, right? Passive investing, or the word passive is often thrown around a lot. In my opinion, if you go out and you buy a duplex and you consider that and you're actively managing it yourself to be a passive investment, I don't think it is, right? Because to me, passive investing is you're 100% hands off. You don't have to deal with any management. You're getting a check in your bank account. You're getting some updates along the way, and there's nothing, actively you're going to need to be doing.
After you actively decide where to allocate capital.
Exactly.
Yeah.
So there's that part, right? And we'll get into all of that, but just to kind of preface it and to take that a step further, right? So in a passive investing environment, right, you're considered a limited partner when you're making a passive investment. And we've probably talked about this on previous episodes, but there's a limited partner and there's a general partner. So a limited partner is the person that's providing the capital, right? They're making the investment. They're providing the majority of the equity to buy the investment. And the other side, the general partner, which would be what we do at Smart Asset Capital, is we're running the deals, right? So we're going out, finding the deal, underwriting the deal, getting financing, putting our name on the loan, managing the property, doing all the investor relations, selling the property. So A to Z, we're doing all the work as the general partner. Limited partner provides the cash.
Exactly. And so the benefits of quote unquote passive investing are time freedom. Obviously, you don't have to spend any time as a limited partner. You don't have to spend any time, managing the asset, whatever that is. You really you get a check every month, every quarter, or whatever that distribution schedule is, and you sort of monitor your investment. But that's about it. The other benefits would be diversification. You have professional management, right? You're riding alongside someone. You might be an expert in doing surgery, but you're not an expert in, operating an apartment building or an industrial building or an HVAC company, so on and so forth. So, and then just scalability. You're able to scale your wealth and grow by allocating investment capital into various different asset classes, different deals, different projects, different sponsors, that you might not be able to do if you were just, doing deals on your own and buying a duplex like you just mentioned.
And then there's really, the 5 most common types of passive investing, right? The most common passive investment vehicles, you could say. And number 1 would be real estate syndications or funds, right? So going out and buying property. The second one would be private equity funds, and that's going out and buying businesses, right? Investing into acquiring businesses. Third one would be venture capital, right? So these are investing into startups, right? So if you see, investing in Uber early on in the process, right? That would be a venture capital, which has a lot more risk, obviously, but can have tremendous upside as well. The fourth one would be debt investments. So investing into, a fund vehicle that is providing debt. And that debt could be placed into real estate, into businesses. It could be placed in any sort of vehicle. And it's more of kind of a guaranteed return with no upside. And then the fifth one would be the public markets, right? So you're investing into stocks or a real estate investment trust, right? All of these are passive investment vehicles. I mean, the list goes on. I mean, there's sure a ton more, but those are really the 5 most common buckets you would see.
Exactly. And as a passive investor, limited partner, it's important to understand the various nuances of these different asset classes and different investment models and the risks and return profiles. Now then there's even, dequity. That's a new term being thrown around, the blend of debt and equity, where there's equity kickers as well as, the general debt investment. So it's important to learn all these. And I'm writing a book on, the various different types of investing passively. And I'm going to cover all this stuff. And this is just kind of a precursor, prelude to that book.
G Money gonna be an author.
G Money's going to be an author by the end of 24.
All right.
Shit's going to be a
Get your
bestseller
signed
too,
copy.
just so you know.
New York Times bestseller coming.
You heard it here first.
All right, so let's double click a little bit on that, like the risk and return profiles.